Thank you to be here to attend our event. So we said it's a wonderful event, and we just from the last panel we can see many informative informations for us. So we just mentioned about this morning the weather is not very good. I was thinking the Chicago Spring like a tango dancer, right? So they just one step ahead and 2 steps back and then turn around for 3 times. Yes, match our Latin American topic. So this is why they have this spring. So my name is Mary Ma. I'm the director of Illinois International Trade Center at Governor State University. So our center, we are founded by SBA and DCO, Illinois Department of Commerce, and Economic Opportunity. So we are excited to just moderate this panel section. So this panel, we are focused on how the small or medium business to use our American government policy or programs and services to help you grow your market in Latin America. So we are very glad to have our wonderful speakers here. So we have speaker from SBA, Small Business Administration, and we also have speaker from the U.S. Department of Commerce, and also from our the U.S. Export and Import Bank, and also it's from our Illinois Department of Commerce, and also the Office of Trade and Investment. So first, I would like to invite our speaker from SBA, Steve Konkle, to just give us presentation first. Thank you.
Basically, what I'm going to do is indicated by the first slide there, is discuss the SBA trade programs. Now, most people identify the SBA with the question of loan guarantees. Now, I want to start out by making the point that even though the balance of my presentation will cover the SBA loan guarantee programs as they apply to international trade, keep in mind that the loan guarantee programs for international trade are part of the regular 7A program and are subject to the same rules and regulations that apply to the 7A program. And I also have a handout, which any of you might want to take, covering all of the elements of the 7A program so you can see the interconnection between them. The 3 components of the 7A program that are specifically geared to international trade are the Export Express, the International Trade Loan, and the Export Working Capital Program. As I said a minute ago, these programs are subject to the same regulatory qualifications as a standard 7A guaranteed loan. The first one of these programs is the Export Express. This is a program which will provide indirect or direct financing to any small business, again, who meets the 7A standards for size and operation. The program minimizes the forms and procedures because, again, as with all of the SBA 7A programs, you're dealing with the bank, you're not dealing with the agency. We work through the banks and not through the individual businesses. The maximum loan amount that we will guarantee is $500,000, and the lenders have expanded authority and autonomy. Under the Export Express program, all applications are submitted digitally, and they are submitted to our processing center, and the bank can receive a decision within 24 hours as to whether we'll issue the guarantee. And also the rate of guarantee, this is one area where it differs from the standard 7A Express. The standard 7A Express is only a 75% guarantee and is only up to $350,000. The Export Express between 0 and 350 will go to 90% guarantee and 75% between 350 and 500. Now, what can the SBA Export Express be used for? Basically, again, it can be used for either bid or performance bonds, development activities such as going to a foreign trade show, translation of product literature, use of foreign markets, and to provide specific transaction-specific finance on overseas orders or revolving letters of credit. The key thing with the Export Express and what differentiates this from the regular SBA Express is that the activities must be related to exporting. And another difference between this and the standard the standard SBA Express is that the business must be in operation for a minimum of 12 months, but does not necessarily have to be in the international markets during that place. You can, if you're in a situation where you have a product you've been selling domestically and you want to go overseas, and you come in and talk to Mary and work with her to get an export marketing plan together, and you need financing to get it off the ground, and you meet the 7A qualifications, the bank might consider using the Export Express program. The second one of the programs that we have is the International Trade Loan Program. And this also is part of the 7A family of loans. Now, again, fixed asset financing is primarily what this program is about. Also, it can be used to develop new markets and respond to adverse impact of import competition. Over the last 2 years, most of the guarantees that we've issued to banks under the International Trade Loan Program have covered situations where it was adverse import competition as opposed to creating and developing export markets. Again, the international trade loan, there is a higher level of guarantee. The thing to remember about the international trade loan is that this is a variation of the standard 7A term loan. But it is, again, as you'll see, as we saw in the last slide, I should say, the situation is that it has to be a situation where the business needs the capital either to acquire equipment, working capital, or to meet foreign competition. This is the limit of the $5 million ceiling, and it can go for 25 years. All of the collateral for an international trade loan must be held in the United States. And also it can be used for permanent working capital, much in the manner that a standard 7A guarantee product could be used. Now, under certain circumstances, refinancing is permitted, although the refinancing restrictions are much more limited within the International Trade Loan Program as opposed to the standard 7A program. The window of restriction, is much narrower for a export or international trade loan program than it would be for a standard 7A term loan product. The third program we have is the Export Working Capital Program. This, again, is a program that can be used to cover pre-shipment working capital, post-shipment exposure, combination of pre- and post-shipment financing. And you can do it for a single transaction or multiple sales under a revolving line. And again, another area where this differs from the regular SBA domestic cap lines program, the domestic cap lines program is a 75% guarantee. This is a 90% guarantee. That having been said, there are situations where if the banker so chooses, they could use the domestic cap line program to finance overseas sales. There are situations where that could arise. Again, pre-export for working capital, contracts for services, purchase orders are with acceptable insurance and a strong buyer. All of that is necessary. Again, the one thing where the SBA export program follows the same rules as the 7A standard program is that credit worthiness on the part of the potential borrower must be established in the bank's write-up at the time they're applying for a guarantee. Again, you can finance labor and materials, purchase any type of normal working capital use. Collateral, again, this is the collateral requirements slightly differ from the regular 7A because of the fact that this is going to be used for export financing and trade financing. So we have slight differences. Again, in the domestic program, we would require first lien. Obviously, the assignment from proceeds are things that would not be required in a domestic product, but certainly in a foreign product. But again, the personal guarantees of all of the principals of the business are required in the export working capital, just as they are in the domestic 7A. As far as the export working capital is concerned, the question of fees is that again, this is the standard 7A fee structure as far as the guarantee fee. Now this is paid by the bank, but the bank, if they so desire, can pass this fee on to the borrower and include it in the repayment. Now the second bullet point is a case where the export working capital within the SBA 7A program is unique. And that is that the interest and lender's fees associated are negotiable between the borrower and the lender. Now in the standard 7A domestic programs, there are restrictions on how much can be charged, what can be charged, and the interest rates and that sort of thing. Those restrictions do not apply in the case of the export working capital program. Eligibility, again, must meet the SBA's size standards, must be creditworthy, just like you would be during a regular 7A program. And again, the business must have been in business for at least 12 months. Credit insurance. This is something Mr. Howard will discuss in his presentation. The SBA has an arrangement with the Ex-Im Bank where we will work with a business to, if they get an export working capital line of credit guaranteed, that the Ex-Im Bank will grant them a discount on the insurance premiums for the credit insurance. And we also strongly encourage in the export working capital program the use of the credit insurance facility of the Ex-Im Bank. We have a very strong relationship with them in this regard. And that pretty much covers most of the major areas of the SBA financing program. And with that, if there are any questions, anybody wants to know anything about the SBA?
Wondering what is the LTV on the collateral for the inventory and other business assets? What is the loan to value or the collateral value on the collateral when you finance, when you do 90% guarantee on the business
yeah,
side?
the letter, yes, that would be considered, right.
That would be up to 90%.
Right.
Thank you.
Thank you. I saw someone here.
Hi, I'm particularly interested in the credit insurance program. Is there information on this SBA website for that?
Yes, there is information on it, but I have handouts for that, and I think that the handouts have a lot more information about how the program works and how it integrates with the standard 7A. A bank that is qualified to do 7A financing can also get qualification. There's one more step in the process to use the SBA 7A Express program and export program in any one of these, but they do have to have additional qualifications.
So I should get your handouts at the break.
Right, but as far as the bank is concerned, any bank that is qualified to use any of the SBA programs is qualified to use, can be going through this additional step, which is really more of filling out forms than anything else, can be made qualified to go into the Export Express. We have right now in Illinois, there are 594 banks chartered by through the Federal Deposit Insurance Corporation operating in the state of Illinois. And at the present time of the 594, 277 of them are qualified to use the SBA program. And during the current fiscal year thus far, we've had 181 banks have used the SBA guarantee program at least once. So I think the numbers speak for themselves.
Thank you. Let us give a big proud to Steve. Thank you so much, Steve.
Okay.